welcome to BloombergQuint. Now, COVID-19 has impacted real estate, including the commercial real estate segment. Now, how is this sector performing, and what are some of the emerging trends? To know more about this, we have with us Mike Holland. He is the CEO of Embassy Office Parks REIT, which is India's first publicly listed real estate investment trust. Mike, thank you so much for joining us on BloombergQuint.
Thank you.
Let me begin by asking you that despite all these COVID-19 crisis that is going on, Embassy REIT has managed to record a very strong performance with rental collection of almost 99%. So how did you manage it?
Yeah, so thank you, Ashwini. You're right. I mean, COVID-19 has clearly impacted all aspects of life all around the world, and in India we had a very severe lockdown in April, May, and to a certain extent also in June. So for the first quarter of this financial year, most of our parks, although they were open and operating with a skeletal level of staff, companies were sending less than 5% of their employees to work. There is a positive trend over the last quarter of an increasing number of people going to the office. There's about 20,000 people currently working in our business parks now. The beauty of our tenant base is that it is a largely international tenant base, largely technology-focused companies. And of course, in this pandemic, technology is the one sector across the world that has done extremely well. And our tenants are really broken into two categories. They're either pure play technology, so that would be either product or services. So product companies who are tenants of ours would be companies like Google and Facebook. Services companies, of course, the Indian IT services companies or international companies like Accenture. All of their indicators are that they've done well through the pandemic as businesses become more technologically focused and rely on technology to continue or engage and change the way in which they do business. For example, in retail segment, doing omni-channel retailing. So those types of tenants that we have and the global captive tenants all relying on technology, they have performed well, and in turn they have long-term contracts with us whereby we continue to collect our rentals. And as you rightly point out, we've collected over 99% in both Q1 and Q2. So you ask how we do that. I mean, it's also about, in addition to the fact of the quality of the tenant, it's also about how we manage and operate the business parks, allowing them to operate the safety precautions that we put in place, and the strong tenant connect. But yeah, we're very pleased with the overall performance. That's not to understate the challenges and the complexity that we've all been through over the last 6 months.
Right. You've also reported a very strong occupancy in this quarter as well. But the management has also indicated that companies constituting around 5.6% of your rentals could exit in FY21. So if you could tell us more about this, like what kind of companies can exit and how are you planning to bridge this gap?
Yeah, so what we've seen in the last 6 months is that there were a number of companies who were already perhaps not the strongest. Often that was domestic-facing companies, not the international captives that I mentioned earlier on. Maybe startups that were not so well capitalized. And for some of those types of companies, the pandemic has been the straw that breaks the camel's back. So they were not in a great position perhaps before. Then, of course, you also have the key impacted sectors in hospitality, in aviation, perhaps co-working, the smaller, less sophisticated co-working players. So there were sectors that were impacted. what we do see every year is we'll see churn in our portfolio that might amount to 3-4% of the total portfolio. Companies will move, and it may be move out or move to our portfolio for consolidation needs, for what I call corporate housekeeping, large-scale companies with many millions of square feet of office space, just do a bit of housekeeping. So we saw one tenant in that category, consolidation and so on. In the past, we would often lease up that vacant space even before the tenant had moved out. And you're right, today we're running a 91.7% occupancy. What's happened today is that the corporate real estate executives of our tenants are in a phase that we call it the pause and assess phase. So when COVID came, there was a pause, there was a focus on making sure that the business continuity was there, people were working from home. They then moved to that assessment stage. How are we going to respond as an occupier in the coming months and years? Do we need to de-densify our workspace, and therefore do we need more space? Are we going to have a more flexible working environment, and therefore, do we need to reconfigure the type of space? So in that pause assess, now there is a pause on significant new leasing. Now, while we did do in Q2 210,000 square feet of new leasing, and we did that at good rentals, 7 to 10% above the relevant metrics, that is significantly lower than was the case a year before. In a last year, typically over the last 5 years, we've averaged about 1.8 million square feet of fresh leasing. So there's significantly less leasing, but the good news is that there has been a significant uptick in leasing quarter on quarter from the first quarter, which was the lockdown quarter. New leasing went up by 8% in the second quarter. So we see that as a good trend.
You have also acquired Embassy Tech Village Park in Bangalore recently, and it is one of the biggest acquisitions in the Indian commercial real estate space. So how is what are some of the market tenants there, and how is it going to add to your portfolio?
Yeah. So to be clear, we have announced the proposed acquisition, which is subject to a few issues. One of which is the very important unrelated unit holder confirmation of that. We are very focused on all of our unit holders within the REIT. We've been through a process around this asset, which both follows the SEBI REIT regulations in terms of related parties, but also our own internal governance standards. We like the asset a great deal for a number of reasons, but like you mentioned, the tenant base would be definitely one of them. The key tenants in that park would include international banking companies like Wells Fargo. It would include Cisco in the technology space, Sony, Eli Lilly in the pharma healthcare space, Flipkart, the Walmart invested e-commerce company, is a significant tenant there. So there's a good spread of different sectors.
Right. The next question is specifically to Embassy, but also industry-wise. So I just wanted to understand, while renewing the leases, do you have any kind of negotiations with your tenants when it comes to, are they asking for downward revision of the rentals? And industry-wise, how do you see this trend panning out, where tenants are approaching landlords for maybe some kind of discounting, given the circumstances we are in right now?
On conversations about rentals, clearly we've got a quality tenant base who have signed long-term leases with us, and they stand by those commitments, as do we as an institutional landlord. So I think that is the reason that it translates through to our high levels of collections.
You have always maintained that work from home model has minimal impact on the embassy portfolio, at least. But having said that, we are also seeing that many companies are moving towards hub and spoke model, where instead of having one big office, they take some smaller offices in and around the city. So how do you see this trend impacting the overall commercial real estate, in the sense that, do you think the demand for larger offices might go down if this hub and spoke model gets better?
Whether people look at hub and spoke as a one-off small-scale office, or, as is our view, more likely that we will be able to offer flexibility across a city, for example, through multiple drop-in offices in the north side of Bangalore at Manyata, and then if we were to proceed with the Tech Village acquisition, having something on the east side, something in the center. I suspect that we may, with the best large-scale tenants, we may move to that sort of model.
So you're open to hub and spoke model to explore it. Also, you mentioned about density, that increase in density because of the various social distancing norms that now the companies will have to follow. So while renewing your existing agreements, have you seen any companies asking for more space just to comply with the new norms?
We've had conversations with a few tenants who are talking about doing that. There's one, I mean, as an example, I had a conversation with one US tenant who was talking about essentially it's reducing the density from a current model that was at around about 100 square feet per person. They've just finished a fit out where they're getting that to 150 square feet per person. And his comment was that they would see a target of getting it to 200 square feet per person. So, but let's not forget that we're just 6 months into this pandemic. I think you'll start to see those changes in density as you move forward over a matter of quarters and years. That when a company makes its next move, when their lease expires, that's when often they'll take the opportunity to reconfigure.
Right. Now, in the residential sector, we have seen that consolidation has started happening in a big way. And now commercial sector also, we are seeing that it's likely to happen. So I wanted to understand from you, how do you see this happening in terms of its scale and nature, and who are going to be the biggest gainers of this?
Well, I think this consolidation towards what we refer to as fewer, larger, more institutional asset owners or developers is a trend that has been moving along for the last 5+ years. So it's not a new trend. What the pandemic will do is it will accentuate and perhaps accelerate that trend as developers in particular who may not have such strong balance sheets, who may not have the scale that the top tier institutional developers have, they may struggle to continue to compete in this more institutional asset owning world. It's not a new trend. It's happened all over the world. But yeah, we believe that will work in favor of our business.
Are you also looking at some other cities as well? Like, you have your presence in 4 major cities, given on the consolidation trend that's going on. So are you also looking at some other cities and opportunity to expand your portfolio?
Yeah, so we typically say that we'll follow the customer, and I've outlined our customers are largely international, A-grade companies using technology for their business. We believe, and we talk to those customers about it, that there are 6 cities that we'll focus on as a result of that, and we're already in 4 of those 6 cities. So yes, we will continue to look at those other two cities. And when I say cities, NCR I would include as one in that collection. So yes, we would look at other cities in addition to Bombay, Bangalore, Pune, and NCR. So that obviously leaves Hyderabad and Chennai.
Two other cities that you will be looking at.
Yeah, we'll continue to look at the existing four, and we'll continue to look at the top 6 cities.
So lastly, Mike, I would like to end by asking you your outlook for the next year. I know we are in a lot of uncertainty right now, but how much time do you think it will actually take for things to normalize in a way, and how do you see the growth in the coming year, given that we get a vaccine and things go on smoothly?
Yeah. Well, what's clearly happening is every month that passes, most indicators are showing a positive trend within India, whether it be in the office sector or generally in the overall economy, or whether it be with the declining cases around COVID. Although clearly one might well be concerned about the air pollution issues and the connected issues in Delhi in particular. But in South India, all of those metrics are looking positive. That pause assess phase will take, we've said, until the end of this financial year, until we see meaningful change in the leasing side. We are seeing a number of our occupiers talk about getting their people back in December, 1st of Jan. So I think we're on a positive trajectory.
Right. On that note, Mike, I wish you all the very best for the coming year, and we hope to catch up with you soon after the next quarter results. Thank you so much.
Yeah, thank you very much, Ashwini. Very nice talking to you. Thanks. Bye-bye.